So what should your minimum scalp size be? Well, there's different ways to look at it. I would say in general on the Emini, your minimum scalp should be 5 points. And a few years ago, it was less than that. So I don't know, back in maybe say 10 years ago when the S&P was, or more, when the S&P was 1,000, the minimum scalp size was probably a point. And it was probably okay to do that up until about 2,000. But around 2000, when the mini was around 2000, he probably needed to switch over to a 2 point trade. And, so based on that, about every 1,000 points that the mini goes up, you probably in general should have your scalp be 1/1000th of that. So looking at the price scale now, it's 6,000. I would say around 5 points to 6 points is a reasonable goal for a scalp. Now, I think it's okay to be flexible with that. So on days where, in time frames where the daily range is a bit smaller, where the bars just aren't as large, then it's okay to shrink your minimum scalp size. So look at today and yesterday. Today had about a 35-point range. Yesterday was a 26-point range. And, that's a little bit smaller than what we have been having. And also have this indicator called the average true range. And I have that set to the last 10 bars. So every bar, it looks at that bar plus the last 9 bars and takes the average range of those bars. And yesterday, it barely broke above 5 points. And it has been like that lately. When compared to the last few months, it's been, cracking 8 points, 10 points consistently every day. So if the ranges are a little bit smaller right now, and we can look at the daily chart, right? Look at the last 5 days. These are smaller compared to all of this that we had for months, for 2 months. And that's okay. I mean, this is going to, right, whenever you see a decrease in the volatility, a decrease in the range, there's usually pretty soon an expansion after that. So we're not just going to stay with these small bars like this. We're going to break out in one direction and then possibly fail to break out, and then we'll reverse the other direction, and those bars will be bigger, more like this. And, there's the flip side of that. Anytime you see an increase in volatility, then at some point you'll have a decrease in volatility. So it always kind of goes back to the norm. There's always a mean reversion in volatility. You can't be sure how long it'll take, but that's something you can rely on, that it will revert back at some point. It's kind of like here. And we had about 5 bars or so that were kind of small, following larger bars. And then it changed. We started to get these bigger days, and it stayed like that for a while. So you always need to be flexible, and you can have your general setups, general plan, but you need to just make small adjustments based on what the chart is doing. So since we've had about 5 smaller days in a row now, probably pretty soon, maybe today or maybe Thursday or Friday, then that volatility, we will see a spike in that. Or it might need to wait. It might happen next week. But I would expect it to happen relatively soon. So on the topic of having a plan based on what the market's been doing lately, I want to talk about the open. Yesterday, on Tuesday, look at this open we had. It was slanted downwards, but pretty much every bar you could have placed a limit order and done the opposite of whatever that bar was, and you could have made money. So first bar, bear bar, you could have bought that close, and in this case, you would have needed to buy more lower and then get out break even. Or if you bought on the low of the bar, you could have gotten a scalp. And pretty much if you did just the opposite of every bar and scaled in it as needed, you could have made money up until about noon, 12:30. You wouldn't have had much of an issue. Even if you bought way up here, could have bought more lower and got out. When you see a market that opens within yesterday's range, it increases the chances that you're going to have an open like this. So what some traders will do is they'll trade small and they'll place limit orders to buy below every bear bar. They'll place orders to sell above every bull bar. And they'll just do that all day. Well, not all day. Well, they can do it all day if it stays like that. But especially, I'm specifically talking about the open here because that's what we've been having lately. So when it opens within yesterday's range, they'll take lots of these little scalp trades. And they have high probability they're winning most of these trades. And from what I've been seeing, you can do it until about 1 o'clock, just reversing every kind of trade. And then around 1 o'clock, you need to be more cautious because around 1, that's you're going into the last third of the day. And I've made videos on this before about the time frames of the day. You have the open, the middle, and the end. And when you're transitioning from one to the other, then you can expect to see a reversal or a breakout. So when you're going kind of from the middle of the day, the lunchtime, into more that 1 o'clock, then the market is kind of revving up again, and it's getting ready to do something. And as we can see on yesterday, we had that ended up having that breakout. Then that breakout reversed. So the last third was different from what the first 2/3 was doing. And so that's the point I'm trying to make about what you can do on the open when it opens within that yesterday's range. The odds that you can scalp with limit orders with impunity, just doing any of it, goes up. You can see if you bought below any of these bars or sold above any of these bars, you were able to make money for at least a couple hours. Even if you sat through this breakout selling above bars, it ended up reversing back. So scalping with limit orders is your style. I would focus on just waiting for the best kind of days to do that. And one of the keys for that is when it opens within yesterday's range. And it's best when it opens within yesterday's final leg. So here is the final leg, and it opened within that. So why is the market more prone to limit orders making money when it does this? Well, if the market's opening within this final leg, that means that it's at the fair price, right? We had the overnight, or sometimes we had the weekend. We had all this time for something to happen, for the market to go somewhere, but it didn't. So that means that fair price is pretty close to where the market is at that moment. And you're not going to see too much conviction from one side because they recognize that as the fair price. If they didn't, they would have done it in overnight trading when the volume was lower. They would have already moved it, but they didn't. So I just wanted to point that out about limit orders on the open, and we've been having that in the last couple of days. And to me, the most important factor of that is opening near the close, opening within that final leg, and that increases the chances that you'll be able to take limit orders. So for trades for today, this first trade, it's essentially a breakout pullback. A breakout of what? Well, two things. First is of these highs of this initial range we had here. It broke out on this bar and then pulled back. And then we got a good bull bar here. And then with a follow-through bull bar. So I like buying above that. It's also breaking above the moving average. Right? So, and I really like playing the moving average. So when it breaks out above and then pulls back, then I like to try to look for longs. Another good thing it has going for it is there's a target up here, which is the close of yesterday. Right on the open, the market likes to try to go in both directions and try to test some of these key levels, like the close of yesterday or the high or the low. So I'm seeing this buy setup with room, with this open space, then that increases the chances that buy would be good. there's a similar setup to this that happened a few bars prior right here. And we had this breakout. You could call this bear bar a test back. It was a pullback. Then you got this bull bar. I avoided buying above this bull bar because I didn't like how this breakout had this big tail on top with bad follow through. This next bar should have been a bull bar, but instead it was a bear bar. So even though we have this high one setup, or this is the first buy after this high, even though this is a buy setup, I didn't like how bad of follow through that this breakout was getting. And what it ended up needing was this deeper pullback to test this, and then a better looking bull bar with better follow through. So it was better to wait to get your better setup here instead of trying to buy here. Market's moving higher. Different ways to draw a wedge. You could draw a larger one or draw it like this. So 3 pushes up, deep pullback. And this is another thing that's been happening lately. We've been having bear breakouts that fail. That could change soon, but until it changes, then you have to assume that it's going to continue happening. And I could scroll back, several weeks, and just show you time and time again where these bear sell-offs are failing to break lower here, failing here and here, failing twice yesterday, and then we have a couple strong legs here, really several attempts lower here, and until this changes, I'm really going to need a strong sell setup below the moving average. Right? It's just the market that we're in where these sell-offs are failing. So 5 bear bars down after a wedge. I'm expecting to get a pullback and then a second leg down, which is what we got. It's it's unusual for the legs to be also strong, like 5 bars down, then 4 up, then 4 down. But ultimately, what happened here is we got a fairly strong sell-off that we can expect a second leg out of, and then this is the second leg. So any bears that were selling here, they ended up getting trapped. So it's just a second leg trap. And then got a higher low and ended up going higher. But with this first one failing, then I liked how we got a bull bar and then a second bull bar closing above the moving average, and then a third bar also closing above the moving average. So I thought this was good for a scalp. Now this one, it only went about 4 points, and that's kind of why I brought up the minimum scalp size at the start of the video. It only went up about 4 points. So, let's say you were going for a 5-point scalp. You still would have been fine. You wouldn't have gotten your full position size, but either you would have gotten out with a couple ticks of profit, or you would have gotten out below this bear bar, and you would have still gotten a point. All right, so it went up far enough so that you could at least get something out of it, but it didn't give you the full 5 points. So about the minimum position size, the minimum scalp size, if your day's range is smaller like this, I think it would be okay to try to lower it to 4 points, maybe even 3.5 points and with that being your goal. And if you are keeping track of this average true range, then you can see around this point, when I was buying there, it would have been maybe 3.25, 3.25. So, you can kind of monitor this average true range and use that as your scalp size. And so if you went for 3.5, if you just use 3.5 all day, you would have these 3 scalps, and you would have gotten 3.5 3 times in a row. If you went for 5, this one would have worked, but maybe you got scared out in here didn't get the full size. And then you wouldn't have gotten full here. You would have gotten the full here. But if you did 3.5, you would have won all of them. So I just think that's something to consider when you're trading, is adjusting your scalp size. You don't need to do it often, but when you have several days in a row that are smaller like this, then I think it's okay to go for 4 points or 3.5. Looking at this, we have 5 bull bars up. 3 of them are larger. After this, even if this breakout fails, we're probably still going to get a little bit more up and pull back a little bit more up. So this is your little second leg, and then ended up, failing from there. But after you get a pretty strong spike like that, then even if the market's not going to go higher, it'll probably go up a little bit more higher. Another reason why this might fail is after these 5 bars, then look how we went sideways for 5 bars. So when you're in a bull trend and you get several sideways bars like this, small sideways bars, well, it could be the final flag. So this is like the final pullback. Then when you'll get one more attempt up, and then instead of this just being a pullback, it ends up reversing the trend. So watch out for small sideways bars after you've been in a trend. So before I go, looking at the daily chart, we're starting to kind of get squeezed here a bit. So what I'm looking at is, the market is still trending up, right? You can draw a channel in here. Right, market's still going up. It's holding at this 200 moving average. We're running into the highs here. Now, the last 3 months or so have been in this trading range, and I think we're at a critical point. As this bottom trend line moves up, and then we're kind of getting into these highs. This is like a form of a wedge, and I think we're going to see some fireworks. Are we going to break out and head higher? Are we going to break out and then fail and then go lower and then go down to this bottom trend line and then go lower? Are we just going to go lower from here and then see what kind of support we get here? It's unclear yet, but this is kind of what I was talking about with how the last few days have been smaller. When you have several smaller days, then you end up getting several larger days. And I think we're going to get those several larger days pretty soon. I think the market wants to see what's above these highs. And after it does it break out strongly higher, or does it go lower? And I couldn't say yet. What I teach is to wait for the breakout and then to see how it retests, and then go from there. But I just think we're going to start having larger moves soon, because we are getting squeezed like this, and the market will react, and then it'll kind of gain some life, and I think move pretty strongly in one direction or both directions. It could go up and then break down lower, or it could go lower and then end up breaking higher. So it'll be interesting, and we'll have to see. You just got to stay on your toes.